talk about this week in stocks. Running in place, it feels like the market's running in place a little bit. We have some big moves, but we're kind of at near the same levels where we started this week. We'll see where today ends up. Let's move to the next slide. We are looking at depending on how this day ends. Supposedly supposed to be a little macro event today, but who knows if the market even really cares. But it could end up being a situation of 4 weeks of selling for NASDAQ, S&P, and Russell 2000, depending on where they end up today. Of course, the macro event today that everybody's been talking about for a while boils down to this. Fed officials basically, it seems like they think we're close to peak rates. They just differ on how close we could be to peak rates. Some of them think we need another rate hike or two. Some of them think we should be done already. Euro and pound are amongst the currencies that are getting whacked. We've been seeing the dollar rise for about almost 6 straight weeks now. So it's been interesting to watch that. And that's part of the reason why the market's been selling off. NVIDIA blew out earnings, much to everyone's surprise. What'd you have on NVIDIA? How'd it go for you? Basically ended up flat yesterday.
It was great for us.
Yeah,
it worked out good. Yeah.
Do you think the sell-off yesterday was related to NVIDIA or just the pricing of the day before move?
That sell-off started way before NVIDIA yesterday, and that sell-off was, that was a buy the rumor, sell the news. That was just like that rally was a joke.
Yeah, I agree. That's what it felt like.
Well, it turned out.
What's that? Go ahead, though.
It turned out to be a joke, right? I mean, NVIDIA pops like that. The market looked pretty strong. You were even saying, maybe you sell this, but not with conviction, right? I mean, you didn't think we go from up 40 to down 40 like that. I mean, that was quite a turnaround.
Oh, of course. I didn't think they were going, up 2%, down 2%, or up 1.5%, down 1.5%.
Right.
Yeah, that was a big range yesterday. I mean, it was it was a 107-point range in S&P. Huge. Looking back at that. A big set yesterday's closing pricing 1.06% daily SPX move. Average closing price in August is 16.22, which is about 1%. So when I'm talking about running in place, it seems like we've had these pops and moves here and there, but for the most part, we've been in around the same area this week. And VIX, for most of the month, we've been kind of around the same area too, it seems. Let's move ahead to the next slide. This is inflation. The inflation in terms of core PCE, which the Fed looks at, and this is CPI, and then we're Fed funds radar. We see inflation turning a corner. Do we need another rate hike, really? Do we really need one? What do you think?
I don't think you're going to see one, but who knows?
I mean, bonds have been weak, right? I mean, at least the 30-year curve has been weak, right? I mean, you think anything with rates could rise there?
Yeah, what is it telling me?
I mean, if bonds stay down here under 120, you could easily see another rate rise because the bond market's definitely been weak. It's come back a little bit. I think it's all just going to depend on where those long bonds end up. If they're under 120, you could easily see another rate rise. If they rally back to 122, 123, I don't think so. If they're down 117, 118, for sure.
Is it scary in any way that the way that the back of the curve has been rising for the last 2-3 weeks? I mean, you see.
It bothers me, but it doesn't scare me. I mean, I'm sick of this inverted yield curve already.
I know, right?
Yeah. I mean, are we losing money again today on it? I mean, every freaking day. No, today we're actually up money this morning.
Is that the hardest trade of the last year?
No, the NASDAQ Russell's worse.
The NASDAQ Russell's all NASDAQ, Saj. I mean,
it's all NASDAQ. I know.
All NASDAQ, yeah.
You could stick the Russell and take it out of the equation.
Yeah, it's just, you might as well just say, yeah, exactly.
Yeah. Let's move ahead to the next slide. Bonds again, here, this stock to bond correlation. I mean, I guess this is almost another slide to talk about bonds, but it's been, most of the time it's negative, as you can see here, and we know that. It's been real indecisive this year, and it's been really hard to figure out. This is SPY against TLT, which of course is 20-year plus bond ETF, but it's been a hard thing to figure out. I mean, and I know a lot of people are trying to figure this whole thing out throughout the year, but this correlation is slightly positive now. It usually is mostly negative. We've had, I think, that time earlier in the year, it was very positive, and then it changed in March, and so we're back at this again. I don't know how much longer we stay. And again, it's slightly positive. I mean, a good correlation is 0.5, right? So, I don't know. This has been a weird thing to figure out.
I mean, in normal times, we would like to see it as a negative correlation. I mean, that's what we're all used to, but I don't think we count on that anymore. Like I used to look at that as it was a pretty much a layup, but since 2013, 2014, Jamal, I don't look at it anymore. I used to think, when we were floor traders trading index products, all we would look at was the main thing was bond stocks, and the inverse relationship. Stocks go up, bonds go down, stocks go down, bonds go up. That's it. It was an absolute layup.
Right.
But now it's nothing like that. Ever since 2008, 2009, nothing like that anymore. Now it's just, it's a complete crapshoot.
Yeah, it is, especially in a volatile bond year like this year, last 2 years, I should say. Yeah. Let's move ahead to the next slide. Oh boy, man, options. This is all the different durations of options, highlighting the fact that 0 DTE options account for 43% of SPX volume. Look at the growth since 2016. A lot of people out there trading 0 DTEs. Obviously, we've stepped up our game with a lot of research on 0 DTEs too. It looks, just from this, the one that's suffered the most is anywhere from 7 to 30 days or 31 to 60 days. When you look at the gray and you look at the yellow, that's the one that shrank the most. What do we think overall?
I think there's some good to it, because it shows that there's a ton of interest in short-term speculation, which is something that we've always argued for. It's the reason we built Bad Trader. It's the reason we've always offered every product on Tasty. We've argued for a long time that there's a crazy amount of speculative interest in markets, and we need to have products to service those. That said, I think for the customers, for long-term success, you've got to be much more flexible than 0 DTs.
There's been debate on how big this number is. One, whether it was 43. One of the banks said it was 5%. SIBO actually came out with their own data to show it's 43%. There's also a debate on who's trading them, which of course we can't fully figure out. People would love to know who's trading them, what age group, right? Like young people, old people, whatever. You guys got any thoughts on that?
Well, first of all, I don't think it's young versus old. The question I would have is it professional versus something else? I think it's, that's the most confusing thing to me. I think it's a little more professional than we might think it is. Only because retail investors can't, if you're not a member, or if you don't have, some form of portfolio margin or something, you really can't trade naked options in the 0 DTEs. $80,000 for a one lot, it's just too expensive.
Who's doing that? Right. Retail.
Right. So I just don't see that as a big retail product. And not everybody wants to be spread in 2, 3, and 4 legs. So unless people are just going long everything.
I mean, I bet there's a decent amount of people do that.
Yeah. That's the way they would have to trade it, right? Or some sort of defined trade.
I mean,
which maybe leads to that volume too, Saad. If you try to think about it a little bit further down the line, even if you're selling premium in there and you're doing it as a spread, double the number of contracts, and so on. I
don't love the size of the marketplace, but I think it's good for business. And I mean, I'm pretty sure they're going to go to, they'll go inside of a day at some point.
Oh, do you really? Interesting.
Yeah. Like hourly or something?
Something like that. Yep. They'll go binary every 15 minutes or something. They'll have it all.
Yeah, probably. Well, for like a Fed day or whatever else.
Yeah, they'll have it all.
Well, how will they have the bandwidth, Saad, if they can't add extra strikes to the monthlies?
They just tell you that.
I mean, it's just unbelievable.
They have the bandwidth.
Unbelievable.
Well, let's move ahead to the next slide.
I hate being screwed over.
Dogs of the Dow, man. Nike's down 11 days in a row. Disney is at a 9-year closing low. Closing low is the key there. It touched these levels during the pandemic sell-off, but it didn't close where it is now. This goes back to 2014. So these two are really ugly right now. You got any positions in these?
I do. In Disney, we're short the 85 puts. Obviously, that's not working. And Nike, you said?
Yeah.
Nike. Well, it's a little more confusing, but basically we're long the 95 puts, short the 90 puts, and I'm long the 95 calls, short the 100 calls. Both of those are ratio spreads. We have like a little bit of a Batman on in there.
Batman.
That's a double ratio spread pretty much for most people.
Yeah, but one of them, it's not really, because some of them are calendarized too. I have to roll today. There was a Nikki bat trade in there where we sold 100 calls and bought the 96s in October. So I got to roll forward, but it's cool.
Are you sure? You said
It's cool.
Yeah, it's cool. It's cool. It's only a flesh wound. Sounds like a personal thing. Are you sure?
Yeah, I'm sure.
Okie dokie.
Something just came out a little while ago. U.S. Treasury, and I don't know all the details yet, but U.S. Treasury is proposing new crypto tax rules. Brokers have to report crypto gains to taxpayers. So we'll see how that ends up fanning out. Is Coin moving on any? Is Coin moving?
Coin had a little bit of weakness yesterday. It's unchanged right now, maybe up ever so slightly. Bitcoin itself is 26,000, but hanging steady. But Coin's really had a little bit of a slide after hitting around 110 or so through all the good regulation that came out, almost like buy the rumor, sell the news kind of thing. It's classic. It's down 25%, maybe a little bit more since that. And that was only in the middle of July. So Coin hasn't been moving anyway in any two-sided action, but it's been soft.
Good. Nice. Ticker VFS. I've been keeping my eye on this. Doesn't have options yet, but this thing has been crazy. Went from like $15 to like $50. It's been on the move. It's a Vietnamese EV. It's $300 billion market cap. It did a SPAC.
$35 billion market cap.
35? I thought it was like a couple $100 billion.
No,
I got 35 billion. Maybe that's
35.
That's the float I got. It may be valued at some other.
It's up 10. It's up $5 today or $6.
Well, as far as the float, I think there's a guy who owns 99% of it, and he released only 1% of the float, and I think that's what explains that. That's mixed. Okay. Yeah.
Oh, is that what it is?
It's something like that. Yeah, it's like one guy owns like majority of the stock.
Wow.
So
no options yet.
And because I thought the valuation is higher than Toyota and higher than Honda Motor Company. Like it's just under Tesla as far as the car companies right now, I believe.
Wow. I had no idea.
Yeah, it's we'll see if this one gets options. It could be interesting. And it seems to have healthy volume too. So we'll see what it looks like when it has options. The next thing coming up is non-farm payroll report. Next Friday is jobs report again. And then research, a market measure. Adaptation of strategies to market sentiments is the one that I liked.
Tomas,
very nice.
Say something poetic. That was good. We'll take a quick 90-second break and come back. We got more Tasty Live after this at the opening bell. Thanks, Jamal. Appreciate your time.